All right, what is up, traders? What's up, tycoons? Super excited for today's video. As always, the content provided on this channel is for informational and educational purposes only, and is not intended to be relied upon as legal, financial, or investment advice. So please be sure to read through the full disclaimer, and we'll go ahead and get straight into it. We're going to start off here taking a look at the weekly time frame for the natural gas futures. And, the analysis we're going to do in the beginning here is going to be more of a, macro perspective. All right. And then we're actually going to zoom into some of the smaller time frames and go over more of a micro, so you can be prepared for the upcoming week and weeks ahead. But, it appears that we got a nice three-wave structure to the downside here, giving us an ABC, right? And if you're bullish, this is going to be your structure, right? Now, this is kind of the structure that I'm favoring here, this ABC. And then we're completing this, and we're looking to complete this with an ABCDE triangle pattern, right? And at this point, we would be getting a breakout to the upside. And that's going to take us right around the 3.5 to about $4 region, for natural gas essentially, and for the natural gas futures. You can see we have this zone here that we have not retested, right? And so, a very simple concept in technical analysis is, old support becomes new resistance. And so we haven't tested this area as resistance in a very long time, right? You can see we tried to test it back as support again over here, and that's when we actually fell through and, no support was found, right? We just broke through that area, and we haven't retested it as support, or I'm sorry, as resistance. So, if natural gas does go into a bullish cycle, it makes a lot of sense to me for it to come up to this area. You can see that we consolidated here. We came back, retested this zone again, put in a nice rounded bottom, and then we rallied, and we haven't really touched that area ever since. So that's the bullish look. Okay, the bears are going to tell you that this is not an ABC, that this is actually a wave one, two, then we have three, and this ABCDE here is a wave four, and wave five is going to come down to the 1.236 extension area, targeting about $1.08 on the natural gas futures. Now, when you look at some of our other indicators here, we have our MACD, we have our RSI. Okay, you can see we got a bullish crossover here on the MACD, and it's just been a slow uptrend, right? Slow series of higher lows, right? We are putting in higher lows on natural gas really since April ever began. In April of 2023, that's when we've come in here and put in the trend of putting in higher lows and consistently putting in higher lows. So, that is the short-term trend, but we are fighting, a strong resistance level here right around the $3 price level that we need to pay attention to, right? Now, what you need to be cautious of is this white line crossing over on the MACD. If this rolls over and gives us a bearish cross, that could be a big warning sign that, hey, maybe we are going to come back down, retest this 2.3 level, and if we break through 2.3, potentially head down to that wave five bearish target of $1.08. But when we look at our RSI again here, we've broken some bearish divergence trends, right? If you're not familiar with bearish divergence, essentially what we had here, was we had a time when we started to make these lower highs on the RSI, while price action was coming in here and making higher highs. So, higher highs on the price, lower highs on the RSI. That's a simple bearish divergence, okay? And you can see the initial, shorter trend right here. We've actually broken through that trend line. But if we were to make this RSI a little bit bigger and clearer for you guys to see, there's the initial trend, okay, that started all the way back here, right? This is where we initially started the larger bearish divergence. Again, bearish divergence is when you have price action making highs and then higher highs. And here we're making a high and then we're making lower highs. So we broke the shorter term bearish divergence trend. And these breakouts of a bearish divergence are good, trading opportunities, right? If you take a look at where that lined up with on the chart, right, that was a good opportunity, coming in here, right around the 2.13 area, $2.15 on natural gas futures, and then you could erode that momentum all the way up to $3. That's a really nice trading opportunity. And so what we're going to look for the next potential opportunity, which could signify the breakout to the upside, would be a break of this larger bearish divergence that we had. And again, just you do have to be cautious. If we come up to this area, reject this trend line, and we get a crossover on the MACD, that's going to be bearish, okay? And that's going to be a warning sign that, hey, potentially we could be coming back down to play out, some of the bearish thesis. But, at the time, I do still favor the bullish thesis. But, there's lots of risks involved with trading something like BOIL, right? And UNG and cold. I have some really great videos, all right, that are out there. It's called, the myths and decay surrounding BOIL and UNG. And there's a lot of myths, both positive and negative, that people just don't understand when it comes to commodity ETFs and as well as leveraged commodity ETFs. And, there's a lot of risks associated with them that people aren't, aware of. And, I do coaching classes every single week. And, I've done countless coaching sessions with people down 5, 6, even 7 figures on things like BOIL, just because, they didn't really understand some of the properties and some of the decay factor, associated with it. You can make money holding leveraged ETFs, but it needs to be in the right environment. And, a lot of people got over in here and in this time frame and just got crushed. And now that price is really just consolidating, their BOIL necessarily isn't recovering as well as maybe some of the natural gas futures are. Enough on that. All right, we'll go to a different natural gas futures chart real quick and take a look at a monthly time frame. We have the MCX futures right here, and this is the chart that I like to look out for the monthly time frame, just so you guys can get a clear idea of, again, the macro trend. And what we're seeing here is really nice, actually, honestly. All right, we have our long-term demand zone, right? So you can see here in the past, this demand zone was created in here. And again, this is the longer term perspective, right? So on smaller time frames, there may be smaller demand zones in between here where price action is reacting to, but from the macro zone, this is clearly a strong demand zone that we bounced off of many years in the past, and multiple times in those past years. And as soon as we came down into those areas in February, March, April, in this time zone, we saw strong demand. We saw very strong demand, in fact, and buyers like immediately stepping in. The major thing is, we've really just been stuck in overhead supply. This is overhead supply here, overhead supply here. Then, that overhead supply turns to new demand. We push up and we came back to test it as demand, and it turned back into overhead supply. And so these are our main supply zones. And you can see, on the monthly time frame, we've really just been stuck, in this overhead supply. When we go to the 4-hour time frame, and kind of look more of on a day-to-day basis, there's a couple patterns that we have forming here at the moment. So we do have a little bit of, kind of a megaphone pattern here, indicated by these two trend lines. And you can see we're bouncing off the lows, rejecting off the highs. And we broke our initial downtrend that we had here, all right, from these 3 candlesticks. We broke through that downtrend. That was a nice trading opportunity. We also got a break and retest right along the support level here, and we pushed up higher. But now we're trying to break through the more, recent uptrend. And if we go back to using our RSI and our MACD, I try to keep the videos pretty simple on YouTube. And these are, some very, in my opinion, beginner-friendly indicators. And the RSI is what's known as a leading indicator, and you have here MACD, what's known as a lagging indicator. So your leading indicator over here is in overbought territory, right? It's above this red line. It's above 70. That's the overbought. And it's telling you that, hey, things may cool off, but just because something's overbought doesn't mean it can't go higher, right? That's oftentimes not the case. Right here, we came into overbought territory. And then what did we do? We actually pushed up much higher. But, being that it's a leading indicator, it's saying, hey, we may potentially pull back. And then here, your MACD is a lagging indicator. So it tells you what happened after it's already happened. So first we go overbought, leading indicator telling us, hey, potentially we could pull back. And then we get the sharp red candle right here, and we do pull back and get the MACD crossover. And then you see we get a little price absorption and we actually get the drop, right? So, that's what we're looking for here as a warning sign that, all right, hey, maybe, we're not just getting some healthy consolidation, being that we've essentially broken through this trend line now. This trend line is kind of a little bit invalidated. If we wanted to, we could, make it a little bit more something like this. Okay. And, we're going to look and see, all right, does this trend line continue to hold? Or is this, going to break down? Is this potentially going to go bearish and break down? Or, a third scenario here is this bull flag consolidation setting up? This right here, this period is not long enough really to consider bull flag consolidation. But if we stretch out for, later into the week, into the upcoming trading week, and, we are able to stay above this 225, even, 219/221 area on the MCX futures, then it's very possible this is bull flag consolidation and we get the move to the upside. But we need to be cautious right here of the crossover to the downside, right? Remember, we talked about, it's overbought, so there is the potential for us to pull back, right? And we've started to consolidate now, but if we get, that overbought and then also the MACD crossover, it's very possible we could see another pullback back to the downside. So that's basically what I would pay attention to and watch out for in the upcoming week, right? Are we going to break this, uptrend that we have right here? Is the MACD potentially about to cross over to the downside? That's going to help you out with things like BOIL. Now, real quick, if you're enjoying this video, I did actually start a completely free newsletter giving out really good investment intelligence and also free trade ideas in each one. And, if you guys are fans of the channel or if you're fans of really good, content, free, valuable content, then I highly recommend signing up using the link in the description or in the comment section down below. It's really good stuff in there, and it's also some stuff that I don't really cover on YouTube as well. And you can get this stuff to you in the mornings, in the afternoons. It's kind of when I've been setting out the newsletters, so that way you don't always have to be stuck on YouTube and always trying to look up YouTube videos. Now, let's go ahead and move on to something like BOIL. All right, we'll take a look at BOIL real quick, and we'll go back to a daily time frame here. All right, now BOIL, a lot of these charts are very gappy, okay? And what I mean by gappy, when I speak of a gap, I'll show you what I mean. So take a look how the top wick of this candlestick and the bottom wick of this candlestick, there's this gap in between here, right? There's all of this open space. These gaps, they do tend to fill about 90% of the time. Now, that's normally for like your broader market ETFs like the SPY. Some of these commodity and, especially leveraged commodity ETFs, the gaps aren't always going to fill, but there's something that you need to, in my opinion, chart up, right? And if you take a look in recent, time, they have been filling, right? There's a gap over here that filled, right, in between this candlestick and this candlestick. And it took a while, but eventually this gap ended up filling. And same thing with the recent gap we had over here. We see we had a gap down after a move up, and we have a doji right here, the kind of an indecision candlestick. And what do? We end up pulling down and filling that gap here. Then what do we do again? We end up turning that gap into overhead resistance, and then we push lower and we came here and filled this gap down that we needed to fill as well. And that was something that I was warning a lot of people, when we had this nice move, right here on BOIL, you can see we kind of broke through this downtrend that we had, but we weren't able to get any follow through. This is a simple term known as a look above and fail. So, what we see is this is the opportunity for bulls to break out, retest, and push higher. And when they don't come in here and take advantage of this opportunity, right, on the breakout for the retest and the push up higher, then it really shows you, who's in control of the price action, right? Because if the bulls are in control of the price action, they're going to break out. And if they do pull back, okay, they're going to, retest that and push up higher. And that's not what we saw, right? So it actually lets you know that up here, hey, sellers are actually in control. We have a gap down to fill, and we have another gap down to fill. Maybe this is the time for you to be cautious, hedge some long positions if you do. I know I talked to a couple of people in these areas about hedging for the gap down. All right, and then you can see very shortly after we filled that gap, BOIL only dropped another $2 or $3, and then we've actually just been moving sideways ever since then. Now, when we zoom out a little bit, okay, again, we still do have a short-term, uptrend here, right? It may look very choppy, but at the end of the day, what are we doing? We have lows, right? We have higher lows, we have higher lows, and then we have, highs, and we have higher highs. So we're going to see if we can continue this very choppy, upwards movement of creating higher highs and higher lows. But we need to be cautious of a couple levels, right? We've dipped below my important level here of $58 a couple times. But when we did so, we formed reversal patterns, right? So Essentially here, right? This is an abandoned baby pattern, right? You see the gap down, then you see the next day, the following day we gap up. That's a bullish reversal. So we did break below 58, but we really haven't been able to stay below it and flip it to resistance, right? Over here, we come down below it one day, and what do? We end up gapping up, right? So each day that we've come down below $58 on Boyle, we have actually gapped up to the upside, multiple times in the past, right? And it still was holding strong here and here again as big support. So if we end up breaking through that level, then it's very possible, Boyle comes down. And if we wanted to, we could say that this is a little micro gap right here. It's very small, right around the 52.50 region. That's not exactly the size of the gap. It's even smaller than that. But, as we mentioned, those gaps are pretty important. They're pretty relevant. You can see here, we had a gap down, and what did we do? Well, we actually came here, filled the gap. Okay. And then once we filled that gap, that's when we actually formed the abandoned baby pattern here and got that push to the upside. So it's very possible, if we do break 58, that something like Boyle is going to come down to this $52 region, but above 58, look for the uptrend to continue of putting in higher highs and higher lows. It's a very choppy process, and that's basically it for today's video. Okay, so if you enjoyed it, you want to help support the channel, or you feel like, you want a little bit of, some more guidance or things like that, you can always email me, ZachlyTrades@gmail.com. As I mentioned before, I do coaching sessions every single week, and we can work on scheduling a coaching session for you guys, for the upcoming week or the week after that, just depending on, what we can, align together on our schedules. And also don't forget to check out the newsletter. There is a website, okay, investment intelligence, .beehive.com. You can go back and you can actually read all of the old newsletters. They get uploaded to the website kind of in, a little bit like blog format. But yeah, really good content in here. We talk about how to identify, topping signals and smart hedging strategies in the market. This was a really, really good one right here, and, was some really great opportunities if you read this and took advantage of the info in there. So thank you guys for watching. Smash the like button and subscribe for more.